Strategic growth is saying which market in the world should I visit? Should I get to? Should I think about? What I would say in any kind of discussion with businesses, whatever you do internationally, don't stand still. Don't stand still. The world is not standing still. Your competitors are not standing still. So you have to do something.
Hello, friends. Welcome to Asia Forward. This is a podcast series highlighting forward-thinking ideas on U.S. Southeast Asia business. My name is Ledy Simarmata, and on behalf of our production team, I would like to thank you for tuning in our first episode. Thank you so much. In this episode, we're going to talk about a big question: why Southeast Asia and why now? We're taping this episode in San Francisco, by the way, because we have an exciting guest that will be joining me in this conversation. He is former Undersecretary for International Trade. He's also former U.S. Ambassador to Singapore, and he's a great friend of mine. Welcome, Frank Lavin.
Ledy, thank you for having me on.
How
Great
are you?
to be here. Super.
And thank you so much for being in our first episode.
Well, it's an honor for me. I love talking about Southeast Asia. I love talking about how U.S. businesses should try to get their game up a bit and do a little bit more in the region. So this is a good opportunity.
Absolutely. Yeah. So now, Frank, Southeast Asia, right? 700 million population. That's huge. It's the fifth largest economy in the world if you look at it as a region. And then it's on its way to become the fourth largest by 2030. Large number of middle-class citizens, hundreds of millions, a large population that are young.
You're giving my speech. I love it. It's great. No, it's true.
It's huge, isn't it? It's huge potential.
Huge, right.
And if we combine the GDP of the 11 countries in ASEAN, which is Association of the Southeast Asian Nations, it makes up to over $4 trillion USD.
That's fantastic. Yeah.
But seems like the opportunity is somehow overlooked or undermined by U.S. businesses?
I think so, although that gap is closing. But I think your premise is accurate that there's been enormous economic success in Southeast Asia, enormous growth of these economies to middle-income status. And so as countries reach that middle income status, their appetite and their hunger for the tech products, consumer products, health products, education products, just booms. So it's an enormous appealing market for U.S. businesses. However, U.S. business activity in the region, in my view, lags a bit. But the gap is closing. And part of it is just increasing awareness of the amount of wealth and success in the region. But part of it, honestly, is the competition, meaning for whatever set of reasons, China seems to get a little more news, a little more attention, and India seems to get a little more news and a little more attention. And I think it's because those are single markets, so to speak, and ASEAN is 11 markets. So it's a little harder, maybe a little more complicated for Americans to come to terms with Southeast Asia, and a little bit easier, so to speak, to talk about China and India. But I'm glad we're talking about it because it's a terrific market.
Yes. Is there any particular challenge in your observation for U.S. businesses? Because you mentioned like China, India, single market, and Southeast Asia is like pretty fragmented. One country is quite different than the other. Like, do you see there is a particularly unique challenge for them to approach the region?
Well, it means a higher degree of complexity. It just means you've got to be a little more thoughtful, a little more customization, a little more adjustments, and even minor issues like labeling. Because ASEAN is its own common market. So any good that is legal, so to speak, registered in any ASEAN market can be sold in any other ASEAN market.
Yes.
So in a commercial sense, it is a single market.
Yes.
But from, a marketing or sales or social media point of view, these are different language groups, different audiences and so forth. So you have to respect that. So there's a little bit of complexity in that market that you won't find, for example, in China.
It reminds me to a conversation I have with a friend of mine. He works, we're not going to name the country, but he comes from one of the Southeast Asian countries. He's here in the U.S., he's leading a team, and the team that he leads, the main task is to promote his country to become investment destination.
Super.
And the target audience are U.S. Is U.S. businesses. Right. And I asked him, like, what is your main challenge promoting your country in the United States? And he said, the low awareness about his country.
I think that's a very
That's
fair
number
point.
one. And he said, if they don't know much about the country, it's very hard to convince them to invest.
By the way, you put your finger on it. So one challenge we mentioned a minute ago is the complexity, that there are 11 different markets. Another one is just distance and limited familiarity, that Americans are going to be more aware of Europe and Western Europe and maybe more aware of our own hemisphere of South America, and that's for our own personal reasons, cultural reasons, family reasons, right? But Southeast Asia is far away. And there are one or two communities that have some of a population group in the U.S. Filipinos, Vietnamese have some. But in general, there are not huge populations represented in the U.S. of those population groups. So there's limited familiarity. So it does take an extra leap, an extra step to get there.
Yeah.
But I would say this to American businesses. I'd say, do you want your business decisions to be made on the basis of simple habit and personal familiarity, or do you want your business decisions to be made on the basis of rationalism? What is in the best interest of your business? Where are you trying to go, and what markets will be the most successful for you? So if you can evolve from simply creatures of habit and personal familiarity to think rationally, you're going to find Southeast Asia attractive. But that's a journey. That's a journey for some businesses. You'll see a lot of U.S. businesses that say, I'm an 80-year-old business, and 10 years ago we went to Mexico, and that's it. That's all we've ever done. I say, oh my God, the whole world is open to you. You need to start thinking about new markets and how you're going to get there and what you have to do there. So you say, all these fellows are creatures of habit, right? And they like the familiar territory, which, is human nature.
Human nature.
But you have to find a way to get beyond that. So I would say get on a trade mission to Southeast Asia, or take a vacation in Southeast Asia.
Good start.
Go to a lecture or a discussion from the Indonesian consulate in Los Angeles or whatever about investment opportunities. But just try to get your game up a bit to develop some level of understanding of these markets.
But do you think there is a strong interest, like regardless of challenges to find information, but maybe they find it challenging to navigate this familiarity with the region. But to begin with, is there any strong curiosity or strong interest from a lot of U.S. businesses that you maybe talk to or interact with?
Look, it's a spectrum of behavior. And it's almost self-selecting. Those companies that are more outward-looking and have more adrenaline, you could say they're in the game and they're making these decisions. But a lot
probably big companies, those guys.
Well, now they're big. But if you look back 20 years ago, 3,000 shoe companies in the world, how did Nike become a global major? What was it about Nike? And this is when they already have global majors like Reebok and Adidas. You already have these extraordinary successful. So what was it about Philip Knight or Nike that he said, I'm going to do this. I'm going to do what Ledy's telling me to do and look at these other markets, right? There was something about that person, his product, his brand, his aspirations that said, I'm not just here to sell in America. I'm here to provide shoes to the world. What about Starbucks? If there are 3,000 shoe companies in the world, there have to be 10,000 coffee companies in the world. What was it about Howard Schultz who said, I think we've got, though, a kind of a brand and a product that can be globally successful. So why didn't I get to Southeast Asia? So it's the individual, I think, the aspiration and vision of the individual says, I've got to do this. Of course, it's a journey. Of course, there are complexities. Of course, I have to have some capacity to deal with the unfamiliar. But if you're at the other end of the spectrum and you say, no, my entire world must be in my comfort zone. I can only deal with countries and cultures with which
That's a bit difficult.
Well, it's going to be a bit difficult, my friend.
Yeah.
I mean, you're going to stay home, right? So, and by the way, a lot of companies are of that nature. They're not necessarily aspirational, but they're doing all right in their domestic market.
A lot of the enterprises, and this is probably, I think, 90% plus of the enterprises in Southeast Asia are medium enterprises, maybe small enterprises, so SMEs. Do you think that, given that this is such an economic strength of Southeast Asia, is there any great angle that you can maybe propose to U.S. businesses about this opportunity particularly?
Well, what I would say is the enormous change in the last few decades is not just the emergence of these markets to middle income status and sort of hungry consumer culture in these markets, but also the emergence of technology that allows you to reach and talk with these people, even if you don't have a national distribution system.
It's quite easy, actually.
It's quite easy.
Connect.
But if you were Procter & Gamble 30 or 40 years ago, you'd have to say, listen, we have to be in 2,000 retail outlets across Indonesia if we want to sell toothpaste, right? And that's expensive and it's complicated and it will take me 10 years to build out. Nowadays, if you say, I've got this new specialty toothpaste for sore gums or whatever, go online.
E-commerce.
E-commerce, and it doesn't require 2,000 outlets. It doesn't require millions of dollars. So the entry price has dropped considerably because of technology, because of e-commerce.
And Southeast Asians are pretty adaptive.
Well, I would say in some respects, they're more tech-oriented than American consumers because in some of the smaller villages, so to speak, you don't have legacy infrastructure. You have your smartphone, and your smartphone is your shopping mall, and it is your communications device. It's everything.
Yeah.
It's everything. So you can talk to a 17-year-old in Southeast Asia, and that person is more tech-oriented than maybe the 17-year-old here because they need that connectivity. So the entry price, if you are in the digital space in the U.S., your entry cost, so to speak, of getting to Thailand or Vietnam, Indonesia, continues to drop, right? You have to have a message, you have to have a story, you have to have a brand, you have to have a product that works. But it's not saying, oh my God, I have to move to the region, I have to hire 20 people, I have to find a warehouse, I have to find a trucking company.
It's no longer like that.
And so the cost dropped considerably to enter the market.
So intention. Right. Actually, there is an intention. Actually, they might find great opportunity in Southeast Asia, partner to collaborate, human resources that are capable and talented to work with.
Sure.
Now, we know there's a theory of China plus one, which is a strategy to diversify your supply chain. And Southeast Asia mentioned many, many times in this conversation as sort of like a fit to this strategy. Yeah. What's your view on that?
I think so. So we have been talking about Southeast Asia as a market for U.S. to sell the goods into, but you are completely correct. It's also part of a sourcing side that you can allocate investment and you can produce auto parts or whatever your inputs are from that market. I would say there's been so much uncertainty and even elements of friction in U.S.-China relationship in recent years that we've seen a real shift in attitude of U.S. manufacturers to say, I don't want to have this, what's called concentration risk. I don't want to be so concentrated in one market that if there's some kind of a trade war or a spat or God knows what, that I'm shut down. I'm shut down, right? So I better start allocating some resources to other markets, and I better take the time and effort to build out production capability in other markets. So that's been an enormous shift. I know I was talking to a U.S. furniture manufacturer, and they moved a lot of activity from mainland China to Vietnam. So I think we're seeing a lot of that kind of activity.
So there are actually a lot of reasons to look into Southeast Asia.
Right.
Like the more I talk to you, the more I thought like, why this is not more in U.S. businesses conversation?
Well, I can tell you,
am I being fair in saying that
listen,
it's
I have this
odd?
conversation with the American businesses pretty regularly, and it's not a Southeast Asia point. We're perceiving it Southeast. It's really just an international point. Some businesses start with an understanding of saying, look, I'm going to get to some level of maturity in my home market in the U.S., and I need to start thinking about international markets. Even if I have no capabilities or history in these markets, I have to start. So some businesses, that's a more enlightened view, I'd say. But I don't think that's a majority view. A majority of people say, well, I just respond to the market. I don't necessarily have a strategy. I don't have growth plans. I'm simply selling potato chips, and I hope I sell more potato chips next year than this year. They say, well, all right, that's a good hope. But by the way, that's not a strategy. That's not a strategy. And you could spend some time and you could say which markets in the world is the fastest growing for potato chips and which market in the world has the least competition and which markets. You could do a little study and just spend a few hours on this project, right? But that is not common. So most companies, I think, are habituated to organic growth. If they simply say, if I'm selling 10% more potato chips this year than last year, fantastic. And they say, yeah, that's good. That's good. You made 10% more. That's fantastic. They say, I have 10% more employees, 10% more trucks, 10% more warehouse, 10% more advertising. Fantastic. Okay, that's great. But that is not strategic growth. Strategic growth is saying, which market in the world should I visit? Should I get to? Should I think about? And why don't I identify the top 3 or the top 5 most likely to be promising markets, and why don't I have some kind of market entry strategy for these 3, right? And now that's a strategy. That's, by the way, what Philip Knight had with Nike. That's what Howard Schultz had with Starbucks to say, it's a big world, and I'm not going to stand still. I've got something to offer every consumer, so let me start going.
Yeah. So I want to pick on your personal experience now, because if you look at the number of U.S. investment to Southeast Asia, which is, I think last year it reached more than $500 billion.
And by the way, it's bigger than U.S. investment in China and Japan and India combined. So it's extraordinary. So there's enormous confidence in the market in terms of political stability, rule of law. It's quite a vote of support, if you will, for the economies and the governments of that region.
Yeah. But, Frank, there's a note to that. If you see the breakdown of that investment, 90% goes to only one country. Oh. That is Singapore.
Oh, all right.
And
the U.S. must have had a good ambassador there, is all I can say.
Well, the former U.S. ambassador himself. So, okay, I get it. Like
Right.
Singapore is a financial hub.
Right.
Right? There are valid reasons. This is an appreciation, by the way, to Singaporean government. This is not to criticize any
Right.
of this reality. This is just
Right.
simply reality.
Right.
It's a hub. It's sort of like a gateway for a long
Right.
time,
Right.
to Southeast Asia. But in your own words, and because you have a particular experience being U.S. ambassador to Singapore, what, in your experience, what made them special?
Well, rule of law and very low tariffs. And we ended up signing a free trade agreement. So we took tariffs. The tariffs were low to begin with. The tariffs were something like a 2% weighted tariffs to begin with. And this is, if you will, an advantage of being a reasonably small country, meaning there's not indigenous agriculture sector, for example. So you don't have to protect any Singapore farmers. There are no Singapore farmers, right? So you have more flexibility. You can say, well, if we don't have our own agricultural sector, why in the world would we ever put tariffs on that? Let's just take it to zero and we can harvest from the world. Anybody who produces can sell it. And so they had that advantage of they didn't have indigenous or local constituencies that would be offended or unhappy. And the larger countries, for better or worse, have some degree of local success, and you have to be mindful of that. So you have to move in more incrementally. So low tariffs, rule of law. By the way, the other huge advantage, I would say, is English is the dominant language.
Yes.
And a former British colony means their commercial code is on British standards, basically. So our message to American businesses is, if you can do business in Canada, you can do business in Singapore. It's that degree of difficulty,
That's
right?
how similar
It's how similar it is. It's basically
and
the British
easy
code.
to navigate.
Right.
Yeah.
So it should be in your comfort zone. It should be, it's not so exotic. Even if you've never been there, you have no friends there, you've never visited.
You'll figure it out.
It's like
pretty
Australia,
quick.
Canada, other former British colonies, right? Same sort of setup, right? These fellows are all good business people, and they drive on the wrong side of the road. That's what we tell them. So,
But since we are Asia forward thinking, right? It's not impossible for other big cities in Southeast Asia to be the next financial hub, to be the next tech hub
and
in
if I may
Southeast
say
Asia.
something on that 90% figure, I suspect, if I may say this, I suspect that's a little bit misleading, meaning the U.S. multinationals will set up a regional finance hub in Singapore. The inward investment goes into Singapore, as you described, but then it's reallocated onto Indonesia.
That's actually what
Thailand.
happens.
Right. So the point is, it is 90% goes to Singapore, but then a huge slice of that goes outward, because again, if you're Procter & Gamble, you're saying, how many islands in Indonesia do I need to have warehouse operations in? Well, a lot. You need to be able to cover, you're covering this continental-sized country. So you need infrastructure and you need all sorts of ability, because you're selling, this is a great market if you're Procter & Gamble. So you're saying we might write a big check from Cincinnati to Singapore, but then most of that money might just go onward to Indonesia.
So if you advise U.S. businesses today, 2026,
Right.
If they want to navigate a country in Singapore a country in Southeast Asia beyond Singapore,
Right.
Because there are other great opportunities out there.
Right.
How would you? We're not ranking the country.
Right.
It's not what we're doing. But how would you prioritize as in sector? Which sector that they should look closer in 2026, and which country they should look closer. Give us advice.
But my approach is, this question is mainly much more related to the firm itself, to the company itself, and not so related to Southeast Asia, meaning what are you doing and what is your appetite? So, for example, if I ask 20 U.S. companies, what constitutes success in a new market for you? Is it a threshold of sales that you need to hit? Is it break even that you need to hit? Is it a rank order that you need to be number one or number two in your category? What constitutes success? So the point is, the first set of discussions is internal to the firm. If we're going to do this, whether it's Indonesia or Mexico, what the heck has to happen that will allow us to be happy 1 year into it so that we can declare success in a good word? The second point I would make to your, I love this question, well, which market and what order? How would we do markets? I'd say, you know what? The typical U.S. company, because it's only grown organically, even a $100 million company, $200 million company, all they said is we've been making potato chips for 50 years. We now sell $200 million of potato chips. So that's a very nice company.
There's a lot of potato chips.
There's a lot of chips. And you say, well, something is working. Your product is good, or your business wisdom is good. Something is functional in this company if you're selling 200 million of potato chips. Yeah. But they said, but we've never addressed this question that Ledy is asking us, which market? We've never done. I said, my friends, the good news for you is you have the local college or university, you have the business majors, You need to get somebody from the marketing department, and we say, you are going to be our summer intern, and you are going to address this problem. You are going to look at the Southeast Asian markets, and you can go online, and I want you to tell me what potato chip sales are online in each one of these markets, how many different variants are offered, and what price points they're offered, what the total market is. Then, if you're really good, which you are, you can look on social media in Indonesia and in Thailand and in Vietnam, and you can say which potato chip companies are putting out the most amount of content and how many followers do they have. And by the way, this is not even a 6-month project. This isn't even a 1-month project. But you're going to have to spend a few days on saying, I'm going through all Indonesian social media platforms, I'm looking at all potato chip mentions and sales, and I'm going to come up with some data. Then you come back and present to us and you answer this question. So what we tell everybody is do discovery. Do discovery, do analytics. There's a lot of data out there, and you tell us what market is most promising, makes most sense for you.
And it's all doable.
It's all doable. And by the way, it can be done by an undergraduate.
Yeah.
And we would say nowadays, we're talking a teenager. If you say, tell me what is the number one potato chip brand in Indonesia, you tell me to go on Lazada, it'll tell you in 30 seconds and say this is the number
Lazada.
one. Yeah,
There you
absolutely.
go.
Absolutely. Absolutely.
So if you just want to look into like the big countries, as in GDP, as in growth.
Right.
For instance, like the ambitious one, Vietnam, Indonesia, the Philippines, right? Do you have particular view of these particular countries? I think it came up in a lot of conversation when it comes to doing business in Southeast Asia. This country with big growth.
But what I like and what I don't like about this question.
Yeah, okay. Please,
what I like
please.
about the question is it's a great first question. It's a great first question to say, look, the market has to be at some sufficient size or it just doesn't make sense. We really can't put all of our effort into going into a really small market, Sri Lanka or Jamaica. We just can't do it. It has to be of some size. So they might say arbitrarily, it must be 80 million, must be 100 million, whatever. That's a good first question. But then I think the other question is, tell me about the market itself. If nobody in the Philippines likes potato chips, or per capita potato chips consumption is 10% of they are in the U.S., it's not indigenous. It's not they like pita chips. They like other kind of corn chips or whatever they like. So you have to do some kind of analysis. It's not just pure size of the market. But that's a good first question. That is, I would not say to anybody, look, you're not going to have come up with a European strategy and put all of your team in Europe simply to go to Ireland or simply to go to Portugal. You know, you're going to look at France, Germany, the UK, maybe Poland or Italy or something. You're going to look at a major market in Europe. But I would say the same thing. You've got to find some level of activity because you say, I'm going to spend the next 3 years or 5 years developing this market. It better be Indonesia, maybe the Philippines, maybe Thailand or Vietnam. I don't know. But it's got to be a sizable market that I go after.
To be reasonable, to make sense.
Well, think of this. You might find an Indonesian ad agency and you might be spending $10,000 a month on social media. But the point is you're at least getting great value. If you're spending $10,000 a month, you're talking to a few hundred million people, right? But if you put that same $10,000 a month into a much smaller market, they say, oh my God, I'm very inefficient. I can't spend $10,000 a month just to talk to a few million people, right? So
I want to retract then to your first statement in the beginning of our conversation, the gap is closing.
Yes, I think so.
You repeated several times the gap is closing. Why you say that?
Well, what I would say in any kind of discussion with businesses, whatever you do internationally, don't stand still. Don't stand still. The world is not standing still. Your competitors are not standing still. Technology is not standing still. Society is not still. So you have to do something. You have to do something. You have to come up with some formula or approach or decision to say, we're going to enter a new market or we're going to build out in a new market. Or we'll pick one in Europe and one in Asia every year. I love that earlier question you asked about size. We think there are 25 countries in the world where our product could be successful. All right, then you have 24 more to go. Tell me what your plan is. Tell me what your plan, your timetable, your budget, and can we reduce the cost in each one of these so it's in your comfort zone, right? So you're not risking your company or bleeding all sorts of cash, but you say it does require some investment. I have to build out. I have to do something. I don't mind losing money for a year or two, but it's a finite amount I'm prepared to lose. That's it. And then I better hit break even by the end of year 2 or get to some kind of comfort place by the end of year 2, and then I'll go on to the next market, right? So you have helping the companies come to terms with their own formula, their own approach, right? But the worst response, to my mind, is I'm not doing anything. I am going to stand still. to say, my friend, you are giving up these markets to your competitors.
Oh, yes.
Yeah, anybody who's got adrenaline, anybody who's got caffeine in their coffee is jumping into these markets, and you need to switch from decaf, is what I would say. Have some caffeine in your coffee.
So, but I think, it's also like, to be also fair, it takes two to tango, isn't it?
Right.
This side of the world and that side,
right.
Of the world. Because I think I think we can agree that perception matters a lot in making business decisions. So numbers is something, statistic is something, but the perception itself, we need to get it, we need to get it right.
Right.
Perception about
Well,
about
if
the
I were
region,
on the Indonesian government side, for example, I would say, I want to look at our business licensing and our import restrictions, and what I want to do is to make sure we are level set with best practices in ASEAN. I want to be able to say, if it takes only 3 forms and it's all online to export to Singapore, I say, fine, I don't want more than 3 forms, and I want it to be all online to export to Indonesia. I don't want to lose out just because of complexity, or we're not digitally based, we're not user-friendly. So I would have somebody just say, make sure that we're best practices. That is easy, fast, and simple for people to undertake business activities.
I'm tempted to ask you this. There's a poll that came out. This is a poll that survey opinion of Southeast Asian leaders. And this is recent. Actually, I read it in the report published by the Asia Foundation.
Oh, great.
The poll survey said that 14% of the respondents, and this is leaders, in the region, only 14% says that the U.S. has the most influential economic power in the region.
Oh, interesting.
14 is not, I don't think it's a high number.
No, not high.
But on the other hand, 56%, I think it's 56, more than half says that China
I'm sure.
has the most powerful.
China is the number 1 trading partner of all of the ASEAN. Yeah,
yes.
So that
and it's quite significant compared to the number of the volume of trade that U.S. had with ASEAN compared to China with ASEAN. So, that's number 1. And also distance, right? China is just closer.
I think so, sure.
Right? But do you think, I don't know whether this is a fair question, that U.S. businesses or United States want to be influential in Southeast Asia?
But I think that question is a very important question, but it really speaks to U.S. government policy and U.S. government position. I don't think it affects business.
It interconnects, isn't it?
But I don't think a business says, I don't think Ford Motor Company says, I'm looking at this chart and I better do more in Southeast Asia. Ford Motor Company, I think, looks at what I was discussing, which population group is buying the most cars? Right, what do I have to offer this group? So it's purely a commercial set of decisions. Yeah. But from a Washington perspective, I would say these numbers are actually very troubling. And these numbers to me say you better do a better job.
Something.
You better get in the game, or you don't want to fall behind through inaction or through lack of appetite. So maybe more trade missions, maybe the Trans-Pacific Partnership would have been a very useful initiative to reduce trade barriers, but maybe more could be done from a policy level to encourage corporate activity in Southeast Asia.
And it will help the business. Like, if there's some particular government breakthrough in the region, it will accelerate a lot of this.
Absolutely. That's the whole idea of trade liberalization.
Yeah.
If we reduce all tariffs, you're going to incentivize more activity. Absolutely.
As we speak now, there are actually thousands of U.S. businesses that have presence in Southeast Asia.
Sure.
So, it's quite big. So these are global companies. So let's say 10 years from now, we are Asia forward thinking, right? A decade from now. What do you think this U.S. global company should look at Southeast Asia when they, formulate their growth strategy globally? How they should put Southeast Asia in their planning for long-term, in, like, say, 10 years ahead? So
my hope for business is to say, rise above your personal limitations or your personal orientation to make a decision based on the merits. And what we ought to do is to say, look, the 25 markets in the world that I need to take seriously, I need to start developing a plan or a thought process for each one of these 25. And by the way, when I'm done with these 25, I go to the next 25, right? And I just keep going, right? If you're Pepsi, you would say, I want anybody in the world who wants a Pepsi to be able to find one. Right? I don't want to say, well, you're a small country, you're a big. I want anybody in the world. If you like Pepsi, we hope so. I want to make sure it is in front of you and you can get one, right? I say that's fair. Now, it took them 100 years to get there, right? To develop this kind of global vision. But I said that's a fantastic vision. But I think you'd say, I don't know if the U.S. auto majors do this, but certainly the Japanese, Toyota would say the same thing. Anybody in the world who wants a Toyota, I want to make sure you can get a Toyota, right? And that means you can get it serviced and repaired and parts and other attributes. So I want to make sure I have a global distribution network and make it as easy as possible for you to buy a Toyota. That's a great way of looking at life.
Yes, yes. This is my last part of the question.
Okay.
I wish we have more time, but I promise this is the last leg of my question.
Okay.
So when it comes to perception, one way we can shape it is by people to people interaction.
Yeah, sure. This podcast.
Like this podcast, exactly,
That's
right?
great, right.
And this can be viewed from anywhere, basically, because there's internet. There's also education exchange, travel, tourism, what we call soft power. That's classified to
matters a lot.
Matters a lot.
Yeah.
So how do you frame this? Like how soft power can actually be very crucial in just be a glue to this.
I think this trend is an extremely positive trend because as these countries achieve middle income status, then you're part of sort of a global conversation. Then you're thinking for the first time, you'll have somebody in Thailand or Vietnam or Indonesia say for the first time, my son is so good at economics, he wants to go to Berkeley. And you say, okay, a generation ago, there just wasn't the money. There just wasn't the resource to do that. And it was considered too exotic, too far away. Now you say, it's not so exotic. It's a plane flight. Go to Berkeley. If you're really good at economics, you ought to go there. And I think like half the Indonesian cabinet went to Berkeley for economics. But so the point is it's more accessible. It's more accessible and technology brings it home to you. So this soft power, this cultural familiarity and connectivity, I think continues to trend positively. I would look at things as to what kind of direct air connectivity can we have between the United States and Indonesia, and can we build that out? And one pattern I saw with international development is that direct air connectivity mattered a lot. People then take holidays there, or they go to school there, or they visit the place and they say, it's not so bad. It's not so bad going to Jakarta. You get from LAX, it's 10 hours or whatever. So you better go spend a week in Jakarta and look around and come back and tell me.
Southeast Asia is not that far.
Not that far.
Yeah, let's not think of that as a very far land out there. It's not that far.
It's not that far.
I mean, we're here. We're in. We can see it's not that far. Right?
I would say it's a big world, and you want to be part of it. You want to be part of it. And I would say, as an ancillary to your previous point, a good idea can come from any place. Somebody you've never met can have a really good idea. Somebody who doesn't look like you or speak the same language can have a really good idea. And if you have the skills to connect with that person, you say, give me the best idea you have. Give me the most important insight you have. Tell me what you think of my product. What am I doing right? What am I doing wrong? How can I make it better? You're getting feedback. You're getting ideas from the market, right? And you'll end up with better product, better activity because of that feedback. So engage is what we're saying, and listen and adjust and adopt, and you can do very well.
Yes.
And by the way, the people in Indonesia like Nikes for the same reason Americans like Nike. It's a great shoe. It's a great shoe. It's technically superb, and it's a fabulous brand, and you'll have a lot of fun, right? So go buy some Nikes, as we'd say.
Yes.
But the point is, the fellows at Nike had to say, I'll bet you a few things. I'll bet you the color preferences in Indonesia are going to be different than the color preferences in America. I'll bet you the main national sports in Indonesia are going to be different, some similarities, but differences than America. So if I'm smart about this, I adjust. I adjust to the market and figure out what these folks like, and I try to get them what they like. Right? And then they're better off and I'm better off if I do that. So good for those folks at Nike.
Yeah. Well, but it's not a mention of Nike in this podcast.
Well, you better get them to sponsor the podcast.
I know. And also, they can listen to this podcast too.
Right. Okay.
This is a good start, to find out more what's going on in Southeast Asia. Well, anyway, Frank, this is absolutely delightful to talk to you.
Ledy, you
really,
I enjoyed it. You get me enthusiastic about this.
I know.
Indonesia and Southeast Asia has so much to offer. And Americans just need to get a little more sophisticated, a little more energetic, and go out and visit those markets.
Yeah, we're excited about that to talk about the potential that these two worlds can work better, even better in the future. So Frank Lavin, thank you very much for sharing with us. I hope you will come back again at some point, to talk about other interesting things regarding Southeast Asia and the U.S. And folks, that's our podcast for today. Thank you very much for staying with us. I hope you enjoyed. I hope you learned a lot. I learned a lot. And I would like to also hear from you. So please find us in our social media accounts. Tell us what you think about this topic. Tell us what you want to know in our future episodes. Join the conversation. Use this space. Use Asia Forward as a space that we can exchange ideas in regards to U.S. and Southeast Asia. You also can find us in our website, asiaforward.org. Get to know our team, and you also can learn more about how you can support this podcast. So tell me what you think. I look forward to hear from you, and I also look forward to see you in the next episode. So see you in the next episode of Asia Forward Podcast.